I'll give a minute for questions, and if there's no questions, I'll be fine with starting out. Oh yeah, so there's a lot of notes for this session. So tonight after the live ends, I will be converting it all from. I wrote it down on a notebook, so I'll just be taking it from the notebook onto an actual like a Word document or a presentation you guys can look at. I was going to make it into a presentation and just present it to you guys on the live itself, but I unfortunately didn't get enough time. So if you guys can't remember everything that's told today, again, this will be recorded, so it will be posted on YouTube later on, whether it be tomorrow or the day after. And even if you wanted the notes behind it, I'll definitely put it on a Word doc or something like that. So the reason we're going over supply and demand zones is because what moves the market are institutions, right? And the reason is because institutions are big banks or big trading firms that literally buy thousands or millions shares per trade, and that's what moves these markets. It's not us as retail investors who buy even like 100 or 1,000. That doesn't move the market as the institutions do because they have so much more position in each of their trades. So we obviously, if they're the ones who are moving the market, we want to be able to predict what their their upcoming trades are, or what their perspective are, or their outlook, right, or what they're seeing on their charts. And that's where supply and demand zones actually come in hand, is because institutions use supply and demand zones a lot. And the reason is because supply and demand zones are basically an area where there's a bunch of unfilled orders left by institutions that have these unfilled selling or buying orders in a certain area. And that's why there's a difference between supply and demand zones. So basically, just to get started about what a supply zone is, a supply zone is an area where there's a bunch of unfilled selling orders, right? So let's just say, for example, actually no, I'll just give you a definition for now, right? So supply zone is an area where there's just a bunch of unfilled selling orders, and a demand zone is an area where there's a bunch of unfilled buying orders, right? So what this means is if the stock were to uptrend into a supply zone, since there's a lot of unfilled selling orders, this means that this selling volume will overcome the buying volume and create a reversal from an uptrend into a downtrend, right? And it's vice versa for demand zones. This means that if a stock were to downtrend into a demand zone, since there's so many unfilled buying orders in that area, those buying orders will be picked up by the upcoming, by these selling orders that are creating this downtrend into this area. And then eventually it will create a reversal into the upside. So that's basically how supply and demand zones work, right? That's why you look out for these areas. Does anyone have questions about that before I get into how to exactly plot them and stuff like that? Like any questions about what I said? I guess I'll take that as a no. Feel free to ask me any questions in the main chat and I'll respond to it. So basically, you can plot regular, you know, supply and demand zones are on bars, which is what I use, or candles, and you won't. It's not like it's impossible to plot them here. It's just that I find it personally easier to plot it on Heiken Ashi candles. And the reason is because Heiken Ashi candles, they remove noise from charts, as you guys see. It shows a trend, right, and a trend strength. So you'll see less noise between each candle. So like an uptrend, right? I have these light turquoise colors as my uptrend, as my bullish candles, versus the pink candles as my bearish candles, right? So you could see whenever there's an uptrend, right, there's just less noise. It's all bullish candles versus a downtrend. There's more bullish candles, right? So that's why Heiken Ashi in a way is actually very useful for when it plots supply and demand zones, because it how would a area like a supply zone form, right? And the way it would form is because, let's say, for example, right, we're trading right here, right? Forget the rest of the time forward. We're trading and trading, and this is SPY, by the way. We're on SPY. So we're trading, and then all of a sudden, in this, after this consolidation, there's just this huge dip right here, right? And once this dip starts happening, all these institutions from having these positions in this uptrend, right, or even in this consolidating area, they start selling, right? But of course, as you guys seen, whenever you put limit orders, how many times does it actually get filled if it's a quick movement, right? Not as much, not at all. You know, it's a very slim chance if you don't fill it at a decent amount. And institutions do not go based off of market orders; they go based off of limit orders. So they set these limit orders, and obviously, since the price is moving quickly, a lot of these limit orders do not get filled, and this is what creates a supply zone. Vice versa for demand zone. Let's say there's an uptrend, right? And the institutions see this and they want to get in, or they want, after shorting a position, they want to get out of the position, so they have to buy the shares. All these limit orders would not be filled because the movement of the stock would be so quick that they would just be left unfilled, and this would form a demand zone. So those are how those zones are formed. So basically, as I said, the way you want to look at it is you want to go to a chart, right? Right now we're on the 2-hour chart for SPY. And you want to look to the left of the chart. You want to look at the history of the chart. And you want to look for big candles, either big green candles or big red candles. You want to look at that trend and look at the history and see if there's any moment where there's the start of this trend, right? So let's say, for example, we look at this area right over here. Be patient with me because I unfortunately don't know how to use TradingView that much. But let's say we look at this area, right? This is where we first start off at. And how the heck do I delete this? Okay. And we look at this, and obviously we want to look at the history. This is how we will find supply zones and demand zones, and I'll explain this obviously as we go on. So we look at this, and then we look prior to this and see if there's any time where a similar trend happened. And would you know it, we see right here a similar trend happened, right? And we want to look back again, not too far, but just a little bit close to it and see if there's a similar trend. And we see it right here. And this is exactly where we can plot our supply zone, right? So to plot a supply zone, and if you guys remember, supply zone is basically where there's a bunch of unfilled selling orders. You want to plot from the last bullish candle, right? So the way we would do this is you take a square drawing tool, right? And what you want to do is, sorry, someone just said that they can't see the screen. Everyone's able to see my screen, right? I just want to make sure.
Yeah, I can see it.
Yeah.
Okay. All right. Treetop, unfortunately, that is something on your side that you do have to figure out. I'm so sorry about that. Maybe you're not clicking on the actual screen. But to continue, the way you would plot this is before the downtrend, right? To plot a supply zone, we'll go to the previous bullish candle before the downtrend and start the box from there. So we would start at the low point of the previous candles and go all the way to the high point of the previous bullish candles. So what I mean is, in this example, we start off right here, right? We start the box and we go to the high of the box and we would extend it. And this would create our supply zone. That's as simple as it is, you know. That's all it is to drawing these zones. It's just finding, for supply zone, you'd find the previous bullish candle and plot according to that from the low to the high of that candle or to the second candle below it, before it, and that will create the zone for you. And now if you can see, if we can, is there a way to extend this? Let me see. me just see. Oh my gosh, I'm so old when it comes to this. That's crazy. Oh, cool. Okay. Wow. Wow. Okay. So this now creates our supply zone. And as you can see, after the supply zone was created right here, you can see SPY trended downwards, right? And then it started trending upwards into the supply zone, and we tested it. And we did happen to, in fact, go into it and not just touch it and then go down, but we did test it within the area. But as you see, we were still in this zone, and then as the selling volume came in, as the buyers started to get weaker and weaker, it reversed, right? And then it tried testing again, but again, it reversed into the downside. And this is where you can see the power of supply and demand zones. So this is obviously looking at the 2-hour chart, right? Let's say if we even go to a 3-minute chart and we go all the way back to this area, you can see that on an intraday, like an intraday perspective, this is actually a huge area where you could get profits. This is from 457, right? 457 all the way down to 451. That is $6 and change, right? That's a huge difference. Like if you bought a SPY put contract at like $1, if you were to hold it from the beginning of the downtrend to the end of the downtrend, that would probably be like almost a 300% profit, right? Or even more than that. So this is why these zones are so powerful, is because institutions respect them most of the time, obviously, right? Not everything is just perfect, and retail investors respect it as well. So basically, that's basically fundamentals of plotting a supply zone on the Heiken Ashi, right? Now plotting a demand zone, right? We would go to, let's just say for this example, we would see right here that SPY has this huge bullish candles right after this, small downtrend. So plotting the demand zones are similar to how we plotted the supply zones, right? So we would start from the previous bearish candle compared to the strongest bullish candle in the trend. We start from the bottom of that candle all the way to the top of that candle and then just extend it. So we're just going to create this box right here, and then we're just going to extend it, and that will be your demand zone. And as you can see, as SPY, rallied upwards, it had this consolidation area, this area right here. So just to give you guys a little bit of background, from a rally, if there's a consolidation area, this is called distribution zone, right? And usually after a distribution zone, there's always a downtrend. Now do keep in mind, there is a pattern called a rally base rally. So what that means
Hey, it's Doodly Doodly Dingus.
So that means that basically into this uptrend, we would have this consolidation area, and then we'd have a rally. So you would have to basically identify if this is a rally-based rally, or if this is going to be a rally distribution to, drop. But in this case, it worked from a rally-based drop, and we see it testing this demand zone right here. And once we start seeing a bunch of buying volume, you could easily enter in this trade over here. You could have got in, if you want to wait for confirmation, right? You could even get in this candle right here. You could have gotten in at 457 and rode it all the way up to 470, right? So hopefully this gives you guys basically how to plot it. I mean, do you guys have any questions about plotting it? Oh, well, hold on. You guys actually do have questions. Okay. So the first question is, does the volume bar matter when drawing the supplies, the SC and the supply zones and the demand zones? Just looking at your examples on 2-hour, it's a relatively low volume bar. What you want to use the volume bar is, whenever there's a reversal, if you guys notice this, there's always going to be high volume. So let's say we had this demand zone right here, for example, and SPY was to trade into it. If there's not a lot of volume picking up compared to the previous volume bars, you can then identify that there's less likely of a reversal into the upside that's going to happen, right? Do you get what I mean? So let's say there's not a lot of volume and we test this demand zone, you can more likely guess that there's not going to be the SPY is not going to respect this demand zone, and it's just going to break right through. Compared to in this scenario, right, SPY tested this demand zone, but then there was a pickup in volume, right? You could see there's a pickup in volume right over here. And this means that there's a lot of buying and selling volume, and eventually the buying volume beat the selling volume, and then we had the uptrend. We had a trend to the upside, right? Hopefully that answered your question. Again, sorry for my voice cracks. I don't know what's going on. That's just bad on my part. But next question. The next question is, what time frame is the best to plot these time zones? I was gonna get onto that later, but it doesn't matter. I could get to it now. When plotting these zones, you want to plot these zones basically before the day starts or after trading day ends. So you want to use the bigger time frames. So you could use the 2 hour, the 1 hour, and the lowest or the shortest time frame you want to go to is the 15 minutes. Institutions personally use 15 minutes, 1 hour, and the 2 hour time frame, right? So that's why you want to use these, because obviously you want to see what the institutions are looking at. So always use the bigger time frames to, look at these zones. And then obviously while the day is going on, right, you're not going to be using Heikin Ashi. You're going to either be using candles or, bars, right? And then you can easily just plot out zones that are going throughout the day, but those are not going to be like respected as much compared to these bigger time frames, because in bigger time frames, these are big movements, right? So that's why you always want to plot these zones first on bigger time frames compared to smaller time frames. I can't believe my voice is cracking up this much. This is so fun. This is so sad. So how far back day-wise for trends is still valid? Okay, I'll get to that. Actually, you know what? That's the next thing I actually have. So there's different type of zones, right? There's a fresh zone, there's a non-fresh zone, and there's a use-up area. Use-up zone, sorry. So basically, what's the difference between these things, right? A fresh zone is basically an area that is not tested yet. So, for example, a fresh zone, right, would be this demand zone right over here, because we have not tested it, right? It's fairly new. Nothing has tested this zone so far. But what's the importance of a fresh zone? Well, think about it. The way these zones work is that it's an area of unfilled selling or buying orders. In this case, a demand zone is an area of unfilled buying orders, right? So the more amount of, yeah, that's grammatically correct, right? The more amount of times a stock tests these zones, more and more of these unfilled orders get filled. So the weaker and weaker these zones get, right? As you can see right here, prime example of this demand zone, we tested it, right? And obviously, since this was, as we can see later on, it was not that strong of a zone to begin with, but it was strong enough to have this reversal right here. But since SPY traded down in here, it picked up a lot of these unfilled selling or unfilled buying orders. Later on, we could see that SPY just broke right through it, because there's obviously not enough buying orders to compete against the selling orders since it was tested. Now, what's non-fresh zones? Well, non-fresh zones are basically zones that are just tested once, right? So, let's see. I guess, let's say we were here on SPY. This here, right, would make it a non-fresh zone. So, as you can see, the zone was created right here. It's not a fresh zone because it's tested once. But in this scenario, right, let's just say we're here. SPY did not test the zone again, so therefore it's a non-fresh zone. So this means that the fresh zones, which are basically zones that are not tested yet, are the strongest zones, and the non-fresh zones are the second strongest, but they're weak as well. And what are used up zones? Well, used up zones are basically this kind of zone, right? It goes from being a fresh zone to a non-fresh zone to just being used up, because it just breaks right through, and this makes the zone weak. So that's basically the difference of the different types of zones. Do you guys have any questions on the different type of zones? Again, as I said, there's fresh zones, non-fresh zones, and used up zones?
A couple of things. For trading, using TradingView, if you hold control while you zoom in and out, you'll find it a little bit easier. But the other thing is, so you're talking about the volume. I'm trying to follow you here. There you go. I'm trying to follow you on the volume. So it looks like you had it hit the first time, then it went up and hit the second time, and you said it had high volume going into it, and so it pulled back up and pulled out of that zone. But it looks like down here in the volume, there was actually decreasing volume once it started going back up. And then the third time that it hit that area, there was an increase in volume, even more than the second time, and it continued down. What am I missing there?
Okay, so are
Are
you
you
talking about
following?
this zone right here?
No, the other one,
This one?
right there. Yeah, yeah. So
Okay.
where it hit right there where you had your cursor, it looks like it has decreasing volume where it's going up, and then it hit the third time where it fell through, and it even had more volume than this one where you have your cursor.
Okay. So you're talking about this area right here, where there's increased volume, or
No,
you're talking
so
about these
where your
times?
no where your green line starts. That's we'll call that the first time it hit the line, and then
Yeah.
it goes it goes up and then it hits the green line again the second time,
Yeah.
right, right there.
Mm-hmm.
And so then after that, it looks like it has lower volume than before it hit, where you have all your pink lines right there where your D is on the bottom. The
Oh,
bottom's on
okay.
the yeah. So it looks like it has lower volume, but it went up. And then the third time where you just drug it out to, it has higher volume and it dropped through it.
Okay. So basically, just correct me if I'm wrong. Basically, your question is these two times there's not as much volume compared to this area right here. Is that what you're asking? And why
Yeah, yeah, yeah.
is
I'm wondering what I'm missing there with the volume there.
okay, so basically there's buying and selling volume. So in this example right here, we had SPY trending to the downside, right? And this is all
Right.
selling volume. But buying volume can pick up, and that's what will create a high volume spike. Now, just because there's a high volume spike does not mean that it will always create a reversal, right? If there's a downtrend, if there's a downtrend or an uptrend, and it's gonna break through an area, high volume supporting that trend, right? So in this case, high selling volume could also validate as a um, as basically an area that's not going to be respected. And this basically comes into what I was going to say next and kind of what I said before. Since these areas get used up, they're weak, right? So that means that institutions are going to obviously be more confident that it's going to easily break through these zones. So there's a lot of more shorting, right? And there's a lot of more selling volume. And this is why this creates this high volume spike. And yeah, so that's basically answer part of your question. And this comes into my next part. That's why after a zone becomes into a used up zone, right? Or an area that's been hit like multiple times and becomes weak, you want to clear it from your chart because it's no longer valid. And just keeping these zones on there will just make you hesitant and make you get into wrong trades. And that's why, for example, after it hits once, you're more likely just gonna just delete the zone or maybe pay a little attention to it, but not as much attention to a zone that is not tested at all. So that's why even though this area over here has higher volume compared to these zones right here, that's because institutions had the confidence to short here, and that's why there was a lot more trades that were placed and was able to break through. And that's why volume analysis, which again I'll go over another day, is a little bit tricky. But if you think about it, and if you pair it with price analysis, it's very easy to dissect volume analysis and see which way volume is working towards. So did that kind of somewhat answer your question?
Absolutely, man. Thank you.
Of course. Again, if I don't answer you guys' question, there's no wrong thing in just asking me again or telling me to explain. If I do find that we're running short on time, I'll just say that I'll get back to it on another live or that we'll just discuss it in private. So definitely don't mind asking me questions over and over again. I have a lot of patience. The next question is just to add to the volume, there doesn't necessarily have to be larger volume. but more of an aggression to buy or hold on, sorry. But to buy or sell, it looks like price came into that second bounce in the demand zone. There was an immediate bullish aggression through there. Wasn't a lot. Okay. No offense, that was kind of confusing to read, but also might be dumb at the same time. So basically what he was saying is correct. Like it's not always that high volume is going to just always be a reversal. High volume could also mean that it's going to break through a resistance or support, right? Let's just go back to bars for a second, right? Let's say we had a let's say for example, you could basically say that this area right here, because it is, right? This area right here is a support. And the way you could trade supports, right? Again, we'll go over this in another live deeper. The way you could play supports or resistance, if the stock is trading near it and there's a lot of volume towards it, it also means there's a higher probability of it breaking through the support or resistance and continuing either down or up. So that's why, it's not just black and white for volume analysis. There's always a lot more to it. So hopefully I'll go over it one day about volume analysis and how you guys can use it. The next question is, what is the difference between support resistance levels versus demand and supply zones? Support and resistance levels are basically areas where the stock just bounced off of or just rejected. Obviously, support and resistance levels could be the start of a zone, but the zone is a larger area versus a level is just one price, right? It's just a set price. In the previous example, like I just said, right? Like this is a support right here. 426 right here is a support because it's just validating one price versus this area right here. It validates the price between, for example, 458 all the way down to 453. That's a supply zone, right? So that's a zone versus a level is just one price. So basically, to sum up the answer, in a support and resistance level, you just look at it for a test in one single price versus a demand and supply zone, you look to test within a range. Hopefully that answers that question. I see a few of you guys typing, so I'll just wait till you guys finish typing. What time frame do you use to enter when you send your plays? My alerts, as I said, I plot the supply and demand zones on the longer time frames, and I'll open Thinkorswim so I could show you guys what I use. But then when I'm day trading, like once the second the day starts, I always use the 3-minute time frame mostly. The next question was, had a question about using these zones. If you want to trade SPY, would you chart these supply and demand zones on SPY or ES1? So ES is basically futures for if you guys didn't know, and SPY and ES kind of trade hand in hand. You sometimes do want to get into practice of looking at futures in the pre-market. Personally, I don't. I just like looking at SPY itself. So I just mainly look at SPY and I don't really look at ES. So if that answers your question, again, it's all personal preference. So if you want to look at ES, you want to get a little bit more info or confirmation in what you're doing, then definitely look into looking at ES. I'm pretty sure you could see it, right? Let me just make sure. What is it, /ES? Yeah. So this is the ES futures that he's talking about. I'm so sorry if I seem rusty with TradingView. It's because I actually don't use it at all. So this is ES, or this is not ES. Anyway, you guys get what I mean. So you can easily search it up, and I'm sorry that was just bad. But the next question is a question about institutions. Are they buying any stock, all stocks, or just blue chips and indexes? Think of it like this. Think of it like this. Basically, institutions are big banks or trading firms that are given money by really rich people to trade and to give them profits, right? So they obviously want to keep as much clients as they want. They want to gain as much profit as they want because, as you guys know, institutions keep a percentage of the profit. So they obviously want to get into less riskier stocks. So this means they do not trade penny stocks as much, right? They trade more blue chip stocks. They also trade a lot of ETFs. So SPY is an ETF, IWM is an ETF, QQQ is an ETF, right? So these are all ETFs because this is less risky compared to all other stocks. Then they trade blue chip stocks like Apple, Tesla, I guess you could consider it as one, Microsoft, all these kind of big companies that are not just going to die off in the next 100 years. Like Apple's not going to die off, Microsoft's not going to die off. It's kind of those kind of companies. So to answer your question, no, they don't trade like risky stocks or stuff like that. Like what's a good example? Plug, I guess. Plug used to be a stock that used to be a hype stock like I think a year ago. That's not a stock that like institutions would trade. Institutions won't trade like stocks like HUT, if you know what HUT is. Like these are all penny stocks. These are all risky, volatile stocks that institutions won't trade. The next question is, do you use TOS, which is basically Thinkorswim? If so, can you share your workspace? Absolutely, I'll share it later on in the live. But yes, I do use Thinkorswim to trade. I've been using it for the entirety of my trading career. The next question is, do you believe SPY is moved by algos? No. Nothing moves SPY, nothing moves the market, but institutions, except for penny stocks, because retail investors, majority of the times, are the ones who move it.
Okay.
But if nobody has any other questions, I'll continue. Unless if you guys have questions, feel free to ask. So I'll take that as a no. Again, just feel free to stop me anytime. But basically, to continue, right? We talked about the different types of zones: fresh, non-fresh, and used-up zones, right? So the reason why you want to classify these zones is to be able to know how strong a zone is. And also, as we had in this example right here, we had this zone over here, if you guys remember, this demand zone. And because it became weak, you don't want to have this zone on your chart anymore because it will just create clutter and it'll create hesitation, which could create bad trades, right? So, for example, if we still had this demand zone right here, right, I'm just going to quickly plot it. If we had this demand zone and we kept it, if SPY traded near this area right over here, we might see this and we'll be like, oh, wait, it's a demand zone. I got to get into calls. And it will just make us get into calls without looking at anything else, like seeing that there's more selling volume. There's a huge amount of selling volume. This zone is weaker, right? It's already tested it before. So that's why it's very important to classify the zones. Like if SPY, for example, were to, of course, God forbid, just dip down back into this 420 zone, we can more likely be more confident into getting into a call the second we find confirmation of buying volume, right? So that's why you want to classify these zones. You want to clear up zones that are weak. So this zone right here, this is absolutely weak. That's why if you guys have been seeing, like if you guys keep on seeing me saying, if we could get to this area 453, if we could get above 460, we're good. We're going to be into a safer market than we are right now because this zone right here is relatively weak. In fact, this is why I don't even have this zone on my charts anymore because it's just non-valid. It's a use-up area. So that's why you want to classify these zones. You want to clear up these unvalid zones that don't mean anything. Just for the convenience of this live, I'll just leave it here so you guys could see the difference between supply and demand zones. But yeah, so clear up clutter. Do not keep zones on your chart that are just been there for like 5 months. No, like 4 weeks ago. If it's been tested multiple times, don't keep it on your chart. Just remove it. So the next part we want to get into is basically what you want to focus on, right? So the first thing you want to focus on, as I've been saying, is fresh zones. So in this example, the freshest zone would be right here, right? This is a fresh zone. actually right here is a fresh supply zone, right? Oops. It's a relatively fresh supply zone. We can see right here. Let me just plot it for you guys. Right, this is a very fresh zone. So these two are fresh zones. Why are they fresh zones? Because we did not test either of these zones. So you want to focus on these two zones, right? If you're trading SPY, keep an eye on these two zones in the upcoming days. The next zones you want to look at is zones that have quicker movements. So let me try to see if I can find a good example. If you go back to this example right here, if you see, the reason why we cannot call this a really good demand zone is because right after this bearish candle and we had these bullish candles, look how weak these candles are compared to these big candles right here. These candles basically validate a bigger uptrend versus these candles, right? So this just shows that, oh, it's just a tiny reversal, but it's going to end up trading back into the downside. That's why you want to always you want to focus on zones that you could plot the zone, right? You could plot the zone right here, but then after you see that there's only a really small movement after it, it's just a non-valid zone. This zone on this area right here, if you were to plot this zone, this demand zone, it would be more valid. So this is why you want to focus on zones that have the quickest movements. A member just said that the live reached maximum capacity. That's pretty bogus. I guess I need to boost this server, so I'm sorry about that. Next time for the next live, I'll have the server boosted to I think level 2, I think, so we can have more viewers on here, so it doesn't cap it off. And then obviously the next thing you want to focus on is the nearer the zone is, the more stronger it is. So if we look back, right, this zone here is so far away from our current time that it's just weaker, right? Because as the stock goes farther and farther away from the zone and it's just time is just passed us by, positions will always get liquidated, even if they're institutions, right? They'll keep these unfilled orders for a while, but obviously if these orders are not filled, they're going to liquidate it. So that's why these 3 things you want to focus on is focus on the freshest zones, which are obviously the newest zones. Focus on zones that have the quickest movements. So this right here is a zone that has a very quick movement afterwards.
What's up, kid?
Oh, what's up, man?
Here's your
Sorry.
bed.
Huh?
Whoa, look at that Benjamin.
Yeah, if you don't mind, just mute your mic for now, since I was in the middle of explaining something. Sorry about that, but as you can see here, this is a quick movement, so this validates the zone. Versus this area right here, if you were to plot the demand zone.
You share a bed with color. That's what I want.
I'm so sorry, man. I just have to mute you for now. Let's see. I muted you for now. Sorry about that. So as you guys can see, like if you were to plot a demand zone right here, it's not relatively strong because these candles following it are not very big or very strong. It doesn't have strong movement. And obviously just focus on the nearest zones versus the farther away zones, because time makes zones weaker. Now, 2 rules I want to go over. As I said, bigger movements create a stronger zone, because this leaves less time for institutions to get their orders filled, right? So just keep that in mind. And the next rule is the more times that the stock tests the zone, the weaker it gets. So those are basically 2 mini rules that we've been kind of going over the past few minutes. But do you guys have any questions so far, by any chance? Can you guys hear me fine? Can you guys see everything fine? Just want to make sure everything is okay. Don't want to leave anybody in the dust. Keep in mind, knowledge is so much more powerful than anything else in the world, so look to learn stuff instead of just flashing through life.
Step on my back, bro. Step on my back.
Step on your back?
Yeah, dude.
Damn, motherfucker, yo.
So again, if I can ask people to mute their mics if they're not going to be asking questions. or I would have to mute you, unfortunately. So
Where?
I'll just be waiting for questions right now for a few minutes.
Raymond Asian, can you mute your mic?
Yeah, I muted him. No worries. Sorry about that, but yeah, maybe, who knows? Let's not classify him as rude. Let's just say that they just weren't aware of the situation. The next question is, can this be a demand zone? Yes, that can be a demand zone. As you guys see that if you guys check the main chat, Hassan posted a picture. Basically, in this picture, if you guys zoom in, you can see right after the previous bearish candle, there was a bunch of strong bullish candles. So this validates the zone and makes it a strong zone. Now, one thing to keep in mind is, I don't know how much you squeeze the chart, if you know what I mean. Like, what I mean by squeeze is, I don't know if you made it like this or like this, right? Hopefully you know what I'm talking about. So I don't know how much you squeeze the zone. So if you didn't squeeze it, then one thing to look out for is that the last bearish candle is not too far away from the high of the last bullish candle. So that makes it a little bit of a weaker zone, but just the fact that there was a lot of bullish candles following this bearish candle validates that it's a strong zone. You like to see demand and supply zones as just basic supply and resistance zones. Yeah, I mean, if you wanna just simplify it for yourself, go ahead, because the market is just basically being able to trade off what you see. So if you can interpret what I'm saying or come up with a new way and it's working out for you, that's just good for you. That's what I did basically. I basically started trading off of trading using the Wyckoff strategy. I took that strategy, implemented my own rules, implemented a few other things, and I just trade based off what I now call my own strategy, right? So yeah, the next question is, I see you use 2 hours a time frame for zones. Is this what you mostly use and found most effective in intraday trading, or mark up a day and 1 hour as well? I personally don't use the daily time frame. I usually use the 2 hour and the 1 hour. No, I personally use the 2 hour and the 15 minutes, to be completely honest with you. These are two time frames I like for plotting out these zones. Institutions use a 2 hour, 1 hour, and 15 minutes. So you could even use the day, but it's just, I personally just don't. It's up to you guys again. Like, obviously, it's going to be stronger zones, as you can see, but there's going to be okay, think of it like this. The higher the zone you go, the higher the time frame you go, the less zones you'll see. Like, you could see we plotted this supply zone and it started off in the beginning over here, but we cannot see this in the daily chart, right? We don't see this at all. Of course, we could plot it at this area, but it makes it a lot more harder, and that's why it's just better to stick to 2 hour, 1 hour, and 15 minute. Right? I said 2 hour, 1 hour. Yeah, 2 hour, 1 hour, and 15 minutes. Hopefully that answers your questions. Do you turn off extended hours to trace zones? Absolutely. You never want to really look at what's it called? At extended hours, so basically pre-market and after a market, if you guys don't know what that means. So you don't want to look at it because institutions don't really look at it. You can sometimes use the pre-market and aftermarket, like highs and lows, as but a support and resistance zone support and resistance levels, but not as zones. No, not as zones at all. That's just not something that institutions look at. Just give me 1 second. I'm just texting my girl back, if you guys don't mind. Okay, let's see. Oh, I missed a question. One of the question was when you use the 2 hour, how many days you use, 5, 10, 30 days. As I said, the newer the zone, the stronger. So it could literally be a zone that goes up to a month or 2 months ago, but anything past that is just kind of weak, right? Like this zone right here, you could validate it as a supply zone, right? This area right here, but it's so far behind that of course it can be used as a supply zone, but it should not be something you should be so confident in SPY respecting, right? So you should like, okay, here's a good way to understand it. If it's a zone that's way farther back, you can somewhat use it as either a resistance or a support level, but do not use it as a zone. Okay, so that's a good way to answer that question, I believe. Would you recommend using S&D, supply and demand zones, for swing trading? Absolutely. I mean, think about it. You look at this, right? This is a 2 hour chart. You look at bigger time frames for swing trades. It's perfect for swing trading, right? Obviously in this market you don't want to swing trade because it's choppy. I mean, look at these. This is the Heiken Ashi freaking chart, and look at how long these wicks are. Heiken Ashi removes a lot of wicks, you know, and the fact that these candles are so, like, it just has so many wicks on it in both ends just shows how volatile this market is and choppy this market is, that you shouldn't swing. I know there's a lot of analysts that are very efficient at swinging, so the fact that they are, you know, that just works out. So yeah, definitely when the market becomes safer, in my opinion, the market will get safer right after we get above 462 on SPY. So after we get above this area, then you can look more into swing trading on your own, you know. So hopefully that answers your question. Double top, yeah, double top. Let's see, honestly. When do you usually enter once? Okay, the question is, when do you usually enter? Once price enters a zone, or sometimes price can go through the zone and invalidate them? So that's a very good question. Basically, there's two ways you could trade this, and there's always two ways you could trade any kind of, you know, any kind of indication or zones, support, zones or levels, right? And it's either you wait for confirmation or you don't wait for confirmation. So what do I mean, right? If we were to not wait for confirmation, what you would do is you would get into, in this example right here, let me just delete this because this one we don't need. But in this example right here for the supply zone, a trade that would be done without confirmation is getting in like calls, right? Not calls, puts, right as it touches the zone, right? And just waiting for it to go down. And the way you would set your stop losses for supply and demand zones, this is why supply and demand zones are so good, is because the risk to reward ratio, if it's a good zone, can always work in your favor. Let's say we have this zone right here. If you were to enter a put right here without any confirmation, right? You can literally set your stop loss right above the supply zone. So that's just a set stop loss, right? So if you're willing to risk it, if you're willing to risk that much of a loss, right, then you have a capped stop loss right there. So you could set your stop loss according to the top of the zone or the bottom of the zone. So for supply zones, you want to set the stop loss to the top of the zone, versus demand zones, you want to set the stop loss to the bottom of the zones. So again, as I said, if you want to enter the trade without confirmation, you just enter it basically when it touches. I obviously do not recommend that. That's just risky as heck. Obviously, if you wait for confirmation, it's always going to make you lose out on profits, but who cares? That is so much better than entering without confirmation and risking losing money. Rather just have $2 of profit versus a $60 loss, you know? Like, which one would you prefer? Obviously, it's going to be the $2 profit versus the $60 loss. So always keep that in mind. When you want to enter with confirmation, basically what you would wait for in this example is as SPY trades upwards into the supply zone, right? We start having bearish candles, and with those bearish candles comes a bunch more volume, right? So as we can see, you know, these volume bars right here for these buying candles, they're not really that strong. But the second this selling candle appears, we can see that the volume picked up a lot compared to the previous candle. So this is where I would personally enter for puts, right? And you would just keep on trading downwards until we start seeing a decrease in selling volume, or we would touch another like demand zone, stuff like that. So that's just how you would enter based off of confirmation or no confirmation.
Did you use that today?
Today I don't think I used zones. Actually, no, I did, and I'll get to what I did today later on, if you don't mind. Sorry to not answer your question right now. It's just it's on Thinkorswim, so I just want to bring that up later on, if you don't mind.
Thank you.
Sure, no problem. Just give me a question. Again, if you guys have questions, just type it out. I'll get to it. Also, give me feedback. Like, is this live genuinely helping you guys and teaching you guys something, or is it not working out as much as you guys wanted it to? Better feedback makes me, you know, be able to present better to you guys later on, in case I'm not doing that right now.
This is great, dude. This is super fucking helpful.
Okay, yeah. As long as it is, pleasure helping you guys out. It's just, I know I stutter a lot. English is actually not my first language. I was actually born in India, and I moved here.
Nah, bro, don't worry. You sound sexy as fuck. Don't
Oh
worry
yeah,
about it.
you too.
You good, bro. Don't worry. You good.
If my girl says it, I believe it. So now you saying it, you know, gives me better confirmation.
Straight. That's some yes, sir. Confirmation.
Yeah, we trade with confirmation. There's my confirmation right there. Let me full port my voice to the world now. But thanks for feedback, guys. I'm glad it's helpful. That's all I care about. Because unfortunately, you know, like, not gonna point out servers, but a lot of servers, they don't offer, you know, free education, and they focus on alerts, and you know, that's a good thing. You know, alerts make you guys money, but as I said, you know, even in Islam, I'm Muslim, so even in Islam, it's always said that knowledge is one of the most powerful things. So think about it. Who would get farther? A trader with extensive knowledge, right, in trading strategies with just $500 versus a trader with 100K with no knowledge at all. So it's just you always gotta think of it that way. I always look to make this lives better. I'll look to obviously bringing in other analysts that specialize in other areas, but mainly it's going to be me. So if you guys ever have any feedback, just let me know. But going back to the questions, the next question is also, would there be another supply zone where that one green candle is between the two supply zones? And apologies for poorly worded questions. No worries. You know, sometimes people don't. I'm not assuming, but sometimes English is not that easy. So it's not a joke or anything. I genuinely mean that. So I get what you're trying to say. So we'll just use this for example, because I think you're talking about this. So you're saying like, once we trade into a zone, right, and we dip, does that dip immediately create a zone? It does, but it's not really strong enough to create a zone to continue that zone. I know that sounds confusing, but what I mean is, this is the original supply zone, right? In this example, and we trade into this zone, and then it trades downward after that. Yes, obviously there's going to be unfilled orders here, but institutions are smart enough to have their orders closed at a certain limit price, where in retrospect, if you compare the unfilled orders from this area right here or this area right here to these unfilled orders, it's not going to be strong enough to create a strong zone. Please let me know if that answered your question, because that's basically the answer to your question, but I just don't know if I worded it correctly. But just because it keeps on dipping or rising after it meets a supply or demand zone does not mean it creates a new zone or makes a zone stronger. It does add a few unfilled orders. That's why it gives a potential of the stock to still reverse, right, the next time it retraces into it, but it does not make it a stronger zone for you to have more confidence or have as much confidence as you had in the previous time that it, retraced into the zone. So hopefully that answers your question. The next question is, if price goes slightly above a supply zone or slightly below a demand zone, but then reverses to the downside in the case of a supply zone, is that supply zone still valid? So that is a very good question. That's something I forgot to go over, so I'm very glad you got that up. Let's just say that the zone, right? Let me just remove this. Let's just say this zone was only this small, right? And SPY was to try to break this. Let's just say we're over here, right? Let's say this is the current day. Let's say SPY was to break above this zone. This means all these unfilled orders are now filled, right? Because not all of them are filled, but 90% or majority of them are filled. So that makes this zone not valid. Even if it reverses into a downside, it makes it less valid, not valid, but it makes it less valid compared to a zone that is that doesn't have the stock trading out of it. So the second stock trades out of a zone, right? It breaks through a zone, and even if it reverses, that makes the zone like 10 times weaker than what it was, because it's common sense, right? Like, if a zone is just a zone filled with unfilled orders, if the stock was to break through the zone, that means even though there was these unfilled orders, these orders are getting filled, right? That it's just less amount of unfilled orders left. So hopefully that answers your question. And what do I mean by confirmation? Confirmation basically means that you wait for validation, or you wait for proof of a trend so you can enter it, right? So not waiting for confirmation is trying to get in before the trend starts. So let's say we want to play puts, right? Because we see SPY trading into this demand zone, no, not demand zone, supply zone, and we're like, oh, I want to get into puts. We would buy puts here if we're not waiting for confirmation, because we want to get an early entry or something like that, right? So that's not waiting for confirmation. Waiting for confirmation is waiting for example, this bearish bar right here, seeing it break down after it tests the supply zone, and then entering a put in this area right here. That's waiting for confirmation. Because yes, you're losing out on profits, but you're also reducing the risk of entering early and then having just the stock not respect a zone or a level that you're hoping for the stock to respect. So that's what waiting for confirmation is. So yeah, hopefully I answered that question. Tendu, I know you do have your stream up. If you don't mind, is it possible if you can just close that stream so it doesn't confuse anybody who joins the stream? Thank you. The next question is, thanks for doing that. You did that immediately, so thank you. So the next question is, after you entered a trade, do you switch back to 3-minute or 5-minute? Well, regardless, I switch to 3-minute the second the market opens. So you don't see me usually on the sorry, 1 second. You usually don't see me on bigger time frames if I'm trading. Like, I'm in Eastern time zone, so the market opens at 9:30. So the second it becomes 9:30, okay, let me see. Let me share how it is for me on my agile trading platform, which is Thinkorswim. Let's see. All right. Okay. So just to make sure, can you guys help me out and just make sure that you guys are seeing what I'm seeing, which is basically Discord?
Yeah, we see the Discord.
Okay. All right. So Thinkorswim is a trading platform I use. So as you guys see, this is my main day trading just layout. I know it's confusing. Don't worry. I'll go very in detail one day about my trading setup and why I have just like three freaking bar like chart setup. Don't worry about it. But as just focus on this area right here because this is SPY's chart. As you guys can see, this is on the 3-minute time frame. So the second the market opens, I set it to where it only shows today's price action, right? And only 3 minutes. So each bar closes every 3 minutes. So the second the market opens, I just always stick to this. I mean, obviously you can, if I want to go to a, if I want to just, look at the overview of the market, I will go to a bigger time zone. But I personally never solely trade off of bigger time zones. You definitely can. I am not saying in in any manner that it's bad to, because you definitely can. In fact, trading in bigger time zones does lead to more confirmational trades, right? So that does mean you lose on profits, but you reduce the risk. And the smaller time zone you go to, the more risk you imply, but the more profits you can potentially gain. Emphasis on potentially. So hopefully that answers your question. So in the morning, as I said before, I always start off with the 15-minute or the 2-minute. I always go to my Heiken Ashi chart, which is how it looks right here on Thinkorswim. I just look at the overview at the 15-minute or the 2-hour, I usually do 360 days, 2 hour, not 360, that's too much. I usually do, I do 180 days, 2 hours. I look at the market, right? I plot out my zones. Then I'll go to the 15-minute chart. I plot out these zones. If there's a zone, like right over here, if you guys see, look at, oh, wow, I don't know why I didn't show you this. So look at this. This is a really good example I had. So if you guys see here on the 15-minute chart, this is why it's important to look at the 15-minute as well, even though you might just look at the 1 hour, 2 hour, because this you can actually plot out a few resistances, but a few zones that you might not see in the 2 hour or 1 hour, because we obviously did not see this when I was showing you on TradingView when it came to 2 hour chart. So as we can see here, we had this not really that strong of a pump, but we did have a really good rally after this bearish candle. So this became into a demand zone, and I plotted this right here, right? This happened on Friday of last week. So I plotted this demand zone right here, and on Wednesday, which was yesterday, I believe. Oh, I'm on the IWM, sorry. So this is on IWM. So basically, my bad. Thanks for correcting me. So as we see that I plotted this demand zone right here. I didn't trade off of this, unfortunately. I was just paying attention to SPY most of the time. But as we can see, IWM traded back down into this area. It tested it, and immediately after it tested it, it reversed into the upside. So this is the power of supply and demand zones, just right here. For day trading, here's why you just want to always look at supply and demand zones first. So there's just an example for you guys. I have some zone over here. Let me see if I could bring it up in a second. Oh, yep, here you go. So here's another example of 2 demand zones that I plotted for IWM. You could see I started this plot off over here. I don't know why I messed this up. It's supposed to, I don't know why I messed this up. I guess I was looking at a bigger time frame. But basically, as you can see, I started this a demand zone right over here. Regardless of the fact that I just had it messed up, it's still a valid zone, right? So you could see that once IWM traded into it, it did kind of break it, but it did have a reversal. So you could have easily entered in calls over here and had a decent amount of profit actually for that day. So I think, yeah, it was Tuesday. It was near the end of Tuesday. So, but as I said, it broke through it. Referring back to the other question, whether a zone gets weaker if it breaks through it. This is a prime example. It breaks right through it, right? It tries testing again, but since it's so weak, it just fails. That zone fails, right? And then you could see I had this previous zone over here, this demand zone. Look at this. Look at how well it respects it right here, right? It obviously does dig very deep into this demand zone, but then it gets bought up and it reverses. Now, this does mean that later on in the future, if we do, God forbid, trade back down into this area, it does make this area weaker. So we do have to keep an eye out for that. You know what I mean? Because you can also see here that once we started trading to the upside, look how weak these bars are. Do you see how weak these bars are on IWM? This means that there is not actually a lot of buying volume. So that means in this attempt right here, a lot of the unfilled orders already got filled, and there was obviously some unfilled orders left, so that's why I created this uptrend, but it was not enough to create such a powerful uptrend like it did over here. So that's why, you know, as I said, just pay attention to the rules that I said. The next question is, let's see. How do you set up supply and demand zones? Very briefly, since you just got here. Yeah, sure. I'll just briefly explain it. If you're trying to plot a supply zone, right? You would first look at the last time there was a lot of bearish candles, right? Strong bearish candles. So for example, it's this area right here, right? And you would go to the previous bullish candle before that, and you would plot from the low point, the high point of that candle, and that itself creates the zone. And it's vice versa for demand zones. You would look for a very strong uptrend, and you look for the bearish candle before that uptrend, and you plot from the bottom of the candle to the top of that candle. And this is using the Heikin-Ashi. It's not using bars. You can obviously use bars and implement it in that way, but I find it much more easier and better to use it in the way that I was talking about, which is using the Heikin-Ashi. Do you use anything with supply and demand zones like VWAP and Fibonacci's? Yes, that is absolutely something I'm going to get into. How long have we been going on for? I actually can't tell. Does it say right here? No, it does not say. But yeah, let's see. I'll see if I could get into that. When do you get out? When you enter a trade? Well, you can either trade two ways. Obviously, the more smarter way is just taking profits when you have profits. So if you have multiple contracts, start trimming at either 5% profit or 10% profit, like I do, right? And then that just secures your profits along the way. If you really want to be risky, what you can do is try to trade from one zone to the other. So what that means, right? Let's say, for example, SPY was to trade into the supply zone and then reverse. You can theoretically keep the put play that you got in right over here in the supply zone all the way till it meets this demand zone, because it's likely for that to happen. As you guys see, like stocks in general always trade within a channel and then eventually breaks out of that channel. So you can theoretically just wait to test the zone, get into a position for the reversal, and then hold that position into the next zone. But that does also imply more risk because we are in a much more volatile market. So that's why you should always just be safe, you know. I personally recommend, since I day trade, I always just recommend just taking profits. Next question. Sorry, I was texting my girl again. Good night, Hassan. Sorry, yeah, good luck for school tomorrow. School doesn't suck. It just brings stability later on in life, so don't think of it that way. How do you choose your strike? Briefly to go over that, I've been actually going over the past 2 lives. The way you want to choose strikes is you want to choose strikes that have very strong volume. So the way you would determine that, first of all, is strikes that end with 0. Oh, we're on SPY. I mean, we're not on SPY, so I'll go to SPY. Actually, hold on 1 second. 1 second. So whenever it comes to strike prices, you always want to choose strike prices that have more volume. The reason is because let's say you get into a contract with low volume, right? Even if it goes green and you want to get out, if there's low volume on that contract, that means there's not a lot of people that would want to buy your contract that you're trying to sell, right? So let's say we were to get into contract at $1 and it goes up to 150 and we want to get out on 150, if there's not a lot of volume, that means there's not a lot of people that are going to be willing to buy at 150 because there's just not a lot of buyers or sellers, right? The more volume there is, there's more people competing with each other to get a better price or to just get into the position. So that means that even if you give a bad, just a bad like limit order, right? You still have more of a chance of getting filled compared to a contract that has less volume. So contracts that have the most volume are strikes that end with 0, right? So for SPY, for example, 430, 420, these are strikes that have the most volume. And the second most volume are strikes that end with 5. So for example, 425, 435, right? And then the third most is even numbers. Odd numbers get the least amount of volume. So always just look out for those. Okay, next question. Actually, I think I missed this question over here. Once you enter the trade like puts, when do you, I think you meant to say when do you get out? As soon as you see the first green candle. Depends how you want to trade your position. If you want to trade based on confirmation, yes. Or the best way to confirm a position, whether you get in or out, is price action and volume analysis, right? But obviously doing that is riskier. So the best way to determine whether to get in or out of a position is how much percentage profit you are in that position. If you're in a decent amount, then just get out of the position. Just be green. Why risk it? That's my mentality. And I have a big account because of how profitable I've been by taking profits. You know, my account is just a prime example of the power of compound interest. Right? It's just tiny profits here and there, but it adds up so much. It's just powerful in the end. Next question is, so would that mean that the previous uptrend near the beginning of February would be a demand zone? Let's see, previous uptrend beginning of February. Are you talking about this? This right here? I think you're talking about this, right? Yeah, it has to be this. Yeah, so as I said, oh, you said control zoom. Oh, thank you for whoever again said that I could press control and then zoom. But yes, okay, so this would be a demand zone, right? You had that correct, because it's followed by, let's say we're trading over here, right? This is currently where SPY is. It's followed by very strong movement, so this becomes a very valid zone. But as I said, nothing is 100% accurate in the stock market, especially in a volatile market like we are in right now. Nothing is always going to be accurate, right? So even though, like, I guess you could say tested right here, and here's a perfect example of just how powerful demand zones are. Like, we did test it over here, so this makes it from a fresh zone to a non-fresh zone, but we did have so much strength in the selling volume right here that it did not matter that we had this demand zone. So sometimes even though a zone can be strong, it does not always entitle the stock and institutions to respect it. Because obviously if that were the case, if traders knew this, right, if traders just followed supply and demand zones and it was just always a case where they were always respected, like literally no one would be losing and the economy would just be in shambles. Because in order for an economy to be prosperous, there obviously needs to be a lot of winners, but there does need to be losers, as unfortunate as that truth is, right? Think of it as a race. If there's one person in a race, right, there's no winner. If there's two people in a race and both of them tie, there's no winner. But if there's three people in a race or even two people and there's two winners or one winner and there's losers, there's still a winner in the end. So that's how the stock market moves. There's losers and there's winners, right? And because of that, we have these movements. So that's why don't 100% on rely like, oh, there's a demand zone, so we're definitely going to reverse here. No, don't think like that. Just be like, okay, there's a demand zone coming up. I'm going to wait for confirmation to enter a trade if there's confirmation of a reversal, right? So that's just the way to look at it. The next question was, I missed a few of the last lives. Is there an archive of the past ones? We only had two before this. The previous one, unfortunately, the one I had yesterday was not recorded. The recording just did not work out. But the first one is recorded, and I think I left a link in the announcements tab, so you could check that out. But I'm recording this one, so this should be good as well. The next question is, would you scalp using at the money strikes for SPY? And also when entering, I'm pretty sure you meant to say in the money, because that autocorrects from, I know, ATM, it's annoying, but, so your question is, would you scalp using in the money strikes for SPY, and also when entering, do you market order or buy the bid and ask? So let's go back to my Thinkorswim. I personally never buy anything that's in the money. You theoretically can. It's not anything bad. It's just the fact that in the money contracts are expensive, obviously, and actually the deeper in the money you go, the less volume there is. So that's why it's just not that greatest of options to go in the money. So that's why I always trade out of the money. So technically, like 430 is out of the money, right? Because 434 in puts right over here would be in the money. But going obviously farther out of the money is way much more riskier, right? Because there's low volume, so that means the price of the option just moves just like up and down very quickly. So, you want to look out for that. I feel like there was more parts to your question. Oh yeah, so when you enter a trade, do you enter a market order? No. I enter limit orders. So the best way to trade it, but also kind of implies a little risk, is by adding a cent or two to the current price of the option. So let's say the current price of the 430 strike is 239. If you want to definitely get filled, like if you want to buy a put, right? If you want to buy this 430 put, you would set a limit order to like 241 or 243, right? 243 will like 80% get filled, 241 would get like 60% filled, but like always setting it at 239, it's like a 50-50. So setting it at the last price is always going to give it a 50-50. So if you're buying into a position, this always confuses me, but if you're buying into a position, you don't want to buy at the bid, you want to buy at the ask. And if you're selling a position, whether you're entering by selling or closing by selling, you want to sell at the bid. Okay, so that's just something you should keep in mind. Sorry, what's this question say? I would assume though, because of the strong downtrend and multiple tests of that low, that with so much action there was bound to break that demand zone, right? Obviously with confirmation with the next candle. Yes, that is true. So going back to how I was talking about how this demand zone respected once, but it didn't respect again. Yeah, so you could also see down here, if there's a trend with volume building up, right, that means that it's a very strong trend. So as you can see here, we had this downtrend right here, and we had a bunch of volume increasing as the time went by. So that validated this trend, and it would also it would make us not get into any calls over here, because we see this increasing in volume, and we also see that it's not really slowing down as much or showing any confirmation of buying strength or buying volume in this example. Yeah, I'm surprisingly still on this live. I actually have no idea how long this has been. And no need to thank me. It's a pleasure being on this live with you guys in the first place. What's a good trim strategy? Just basically start trimming at 5% onwards. That's basically how it is, Like, okay, if we go to my log here, this is March's trading log for me. You can see that, first of all, I'm on this thing called Shadow PC. It's like a virtual PC, and it streams it, and for some reason, it like makes everything dark mode, so I'm so sorry if it's making this whole thing dark mode and hard to see. But basically, as you can see, like my profits are always 5% onwards, but there's a few times where it just goes to 5%, and it's just like, it just it just bums out afterwards. So it's always just smart to start taking profits 5% onwards. If you were to take my trades, since everyone keeps on asking like what percent should I trim out, what you can do, right? Obviously, I'll be honest with you guys, I don't like you just piggybacking off of my exits because in reality, think of it, how are you even learning off of that? You're risking so much more just waiting for me to trim and alert the trim. Because think of it like this, I'm on Thinkorswim, right? I'm a college student and I'm not a lavish guy. I don't just live expensive. All I have is just one monitor, which is my laptop, which is a Dell Inspiron 1500, which is not the greatest of laptops, right? So I just have one monitor, right? And then I have my phone. So I would exit the trade or trim, right? Based off of this one monitor, and then I have to go on my phone or my laptop and then type out the alert. So you are basically missing out on what, like 30 seconds or maybe even like 5 seconds depending on if I have the alert typed out. But so that's why like it's always smarter to be 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 more independent, you know. Don't be so dependent on me. I get if you want to be dependent on my entries, that makes sense. That's basically my job for you guys. You know, you could be dependent on my alerts in terms of like entries. That's fine. I understand that. Obviously, at one point, I do want you guys to just learn and be able to like look at what I'm looking, not exactly my alerts, but look at my charts and my alerts maybe, and use that as validation into your own positions. I really hope you guys reach that at one point. But once you get into a position, let's say it reaches 5%, right? Let's say it reaches 7% profit, right? And you have a few contracts, or you just really want to hold on and make sure you don't miss out. What you can do is you can set a stop loss at 5% profit, right? So this way, even if SPY were to go from 5% to 7%, and then you set the stop loss at 5%, and then it just skyrockets to 40%, you did not sell out of your position at 5%, right? So you could just keep on increasing your stop loss as it goes. If it reaches 12%, you would set the stop loss at 10%. If it reaches 20%, set at 15. You know, you guys get the gist of it. So that's basically how you can trim. Well, not trim, but basically if you have one contract, right? That's basically a way you could somewhat not not lose out on a lot of profits. Instead of just the second reaches 10%, just sell a limit order and just get out. Obviously, that's a safer option because you're capping your profit and you're also reducing your risk by 100%. So that's the safest way, just exiting all out at a certain percent, right? Obviously, the smaller the percent of profit that you exit out at is the lower risk you're given upon, or whatever the right term is. But yeah, man, I'm talking so much. Please, please, please. I know a lot of you guys joke, but please do not full port either me or any other analyst or even your own trade. The most you should be going into any trade is 20%, and that is it. Anything above 20%, even 21%, is a full port. I don't care what any of you say, and I'm sorry if that sounds rude. That's the truth. Do not full port. I do not encourage it. And if I do see servers that I alert in, you know, just full porting, I do tend to leave it. Like, even if I get paid in that server, I do leave those servers because, one, people could full port and make me look bad even though I had a good alert, right? Even though it sounds selfish, that's the truth, right? And also, I do not like being around people who have that mentality. Now, obviously, a lot of you, you know, you you start trading because you're like, oh, I want to get rich quick. Hopefully, you see from my lives that it's not about that. It's about just growing your account. And if you just look to grow your account, you will be rich in the end. It doesn't matter if you're a billionaire now. It just matters that you're going to be a billionaire or a millionaire in your life, right? If you try to reach a millionaire within the year, you're just going to be putting so much more risk onto your trades, right? You're going to be chasing trades. You're going to be holding on to trades when you shouldn't be holding on to trades. So instead, just look to grow your account, right? So that means stop full porting. Do not full port, please. I know you guys are joking, but please don't full port. And even if you do now, I will I will have full faith and not faith. I'll have full respect if you no longer do it from now on. I forgive you for the past times that you full ported. It happens. I did that in the beginning too. As I said in the previous lives, I took my count from 300 to 24k in 1 month, but I was literally doing that full porting, and then I took it from 24k to 1k after one bad trade, and that just killed my count, right? And I never full ported after then, and then ever since then, from 1k, I've taken 1k to now. I don't like being too specific because it does bring the evil eye upon me, but I have taken the account from 1k to upwards of past 8 million, close to 9 million over the, I guess, time frame of 8 years, you could say. So think about it. 8 years ago, I obviously was not where I am now, but I am now where I am now. And I could say 100% I'm happy where I am because in the end, I'm still at this level. And you guys, in the end too, even though it might be a long wait, whether it be 4 years, 10 years even, you're still going to be at that point. And that's what matters in the end. It's not about getting rich quick. The only way you could get rich quick in this world, honestly, is by being a girl on TikTok and opening up an OnlyFans page. Or scamming people. That's the only way you could get rich. And do not scam, because you just get sins for that. Don't do that. Be a moral person. That will always get you somewhere in life. Okay, next question, or next statement is literally made it dummy proof. Yeah, just, okay, here's the biggest tip. I'm a very dumb person. Okay, I'm very dumb. The way I'm so successful in the market is because I take all these complicated things and I simplify it to a way I will understand. This is even how I study for college. Since I'm in college, this is how I study. You take all these complicated things and you simplify it, it becomes 100% easier for you to, you know, for you to learn and remember because it's in your own words. And hold on 1 second, I'm so sorry, my girl was texting me. I'll get back to what I was saying. So as I was saying, shoot, wait, what was I saying? Oh yeah. Everyone is stubborn in the end of the day. If I have an opinion that garlic parmesan wings are is probably the best wing flavor I've ever tasted, I'm gonna be stubborn about that. And that's just similar how you would want to study stuff or dummy proof stuff or just simplify things. If you simplify and make it your own words, you're gonna stick to it because you're gonna be stubborn about it and you're gonna remember it better. You will always remember an opinion versus a fact. There's no one that could prove me otherwise. There's nothing you could say that could prove me otherwise, right? If you make a fact into an opinion, your own opinion, you always learn it. I'm probably making this so complicated, but you guys get what I mean. Sorry, I missed one of you guys' question. So for demand zones, it's to the top of the body of the candle, right? As in excluding the top wick, or do you count the whole candle? Basically, for demand zones, right, we'll just look over here, for example. You would, let me just delete it so I could replot it for you. Basically, what you want to do is you want to start from the previous, like the recent low. So technically, you could start off the box from over here, right? And then you go to the open of the, or like the top of the bearish candle, and that is your demand zone, and vice versa for supply zone. So that's basically how you do it. You know, I actually missed out on this one, and I didn't properly plot it because it's the most recent low for demand zones and the most recent high for supply zones. So technically, this is actually the zone you want to be looking at. Whoa, sorry. This is the zone you want to be looking at for SPY. It's between, what zone is it? It's from 420 to 411. So that's how you plot a demand zone. and vice versa for supply zones. You basically want to do the most recent high. So again, we do it from here to to like the bottom of the candle right there. So hopefully that answered your question. Any other questions? Let's see. Is this, so one of you guys posted a picture saying is this the right way to plot it? That is absolutely the right way to plot it right here. I'll just make a reply for you guys to look at it. This is the perfect way to, plot a zone right here. He did it perfectly. So nice job on that. And you sounded so hurt to read that one. It's okay. It's okay. We all make mistakes. The real way we could be either a man or a woman is by accepting our mistakes and just learning from it and not repeating it. So just be thankful you have mistakes, because later on in the future, when you face it, you know what to do. So that's always the one way you could always look at all these negative things. Just you faced it before, you know what to do now. Man, I still haven't eaten dinner. It's 1:17 a.m. I'm gonna finish answering you guys' questions. So keep on posting questions if you do have it, and afterwards I am going to order some food. Let's actually see what's available. I wonder if McDonald's is available. So please put some questions right now, because in a little bit, like obviously I have to wait for the food to get delivered to me. Because I actually I know you guys are not interested in this, but I'm in Hofstra University in Long Island in Hempstead, and Hempstead is actually it's not a safe place. I remember the first day I literally came to Hofstra, and there's Popeyes literally right outside my campus. I walked out of the campus, and a girl came running up to me. She grabbed my shoulder, and she was like, "Wait, don't go over here. My friend literally got stabbed over there, so you shouldn't be walking this area." So I was like, "Oh, okay." Casually just walked back into my freaking dorm and never just walked out of my campus after that. If I go out of my campus, I'm always going in a freaking car. So just give me a minute while I order some McDonald's, which is so unhealthy. So unhealthy, but what am I gonna do at this time? But meanwhile, yeah, guys, just keep on posting questions, please. I don't know why I'm saying please when it's for you guys' sake. Ooh, I think I'm gonna go with the double quarter pounder with cheese. That's gonna look good. That sounds tasty. Is it me? Okay, I need to ask you guys this. Does Uber Eats inflates prices for food items, or is it just actually a price? Like, for example, a double quarter pounder with cheese apparently costs $8.63. Is that inflated? Because I feel like that's inflated, right? That's stupid. Man, I wish I had a car. I wouldn't have to deal with that, but okay. I always thought like, oh, Uber Eats is so cool, they don't inflate it, but yeah, that's crazy. I like, come on. Like they don't make enough money charging like $10 or $5 on fees, delivery fees. I don't get it. Oh my gosh, yeah, gas. I've been hearing about gas. Also, the people who are actually posting legit questions, don't worry, I'll scroll back up to the top and answer it. Hold on, Taco Bell's open at this time? The main question is, do I want Taco Bell or McDonald's? I'll go with McDonald's. I'm so sorry about talking about my food. I'm so hungry. I haven't eaten since 2 p.m. and it's already 1:20 a.m. That's how freaking my class schedule was today. It was just class after class. Okay, why don't they allow crispy chicken sandwiches after midnight? That makes no sense. Whatever. I'm so sorry, I'm almost done ordering my food. Forgive me. Forgive me. My major is health science. I switched from biology to health science. My plan is to go into medical college to become a doctor and then basically become a doctor as a radiologist. And obviously biology is just the way most people take, but I honestly saw more value in health science because biology is kind of the overview of all living things versus health science is kind of more patient care, health policies, health economy. I just found that more sensible if I'm going to become a doctor. Obviously, you guys are entitled to your own opinion, but I just honestly saw it that way. Just give me like less than 5 more minutes. I'll have my food just done with. Sorry, I'm not looking at the questions you guys are posting right now. Just give me 1 minute. I'm gonna be eating so unhealthy today. I don't like that, but I'm so hungry. It doesn't matter. I think I deserve it. Man, okay, I switched from McDonald's to Wendy's because I was kind of craving spicy chicken nuggets. All I got was a burger, 20 pieces of spicy chicken nuggets, a medium-sized fry, and it comes out to $21. I think that's reasonable. I'm not sure. But, it is what it is. Oh my gosh, it comes out at $31. Wow, okay. One thing to keep in mind, even if you do come to a big amount of money, you don't just waste money like that, like what I'm doing. Okay, my bad guys, I ordered my food, so sorry for taking long. Okay, I don't know why my voice is cracking up today. Forgive me for that. Okay, alright. Okay, first question, one of the questions I got. Do you buy into calls when price hits a support level on a red candle or when it shows strong reversal? Premiums seem to jump a lot when a reversal comes in. Yeah, that's true. Premiums obviously do always jump when confirmation comes because a lot more people will enter when confirmation comes, right? So that's one thing you always want to keep in mind. That's why just entering a little bit earlier sometimes pays off, but you basically have to look at your risk and reward. You want to have a good ratio on that. So I personally, I wait for confirmation or I wait just a little bit before confirmation. So you can either wait for a little confirmation or big confirmation. I usually wait for a little confirmation or sometimes most of the times I wait for big confirmation and sometimes I wait for a little confirmation, but I always wait for confirmation personally. But yes, full port is a sin in trading. Absolutely. Next question is, when you said to put a stop or trim at 5%, it means that the option already has make profit. If it does not profit at a loss, wait, I'm so sorry. I'm so tired to understand this sentence right now. I don't mean that in a mean way. Okay. One second. Okay, it's not your fault for that. I just honestly have barely any brain cells right now. So I think what you're trying to say is, are you talking about stop losses? Would you be able to repeat this question? Could you try typing out this question? If you don't mind, I'm so sorry to waste your time like that, but you take the wick off the top as well? Yes, I do take the wick off the top as well. How much do I charge for alerts? That is something that we can talk in private. Chicken nuggies go hard? Yes, they do. I just find it satisfying to eat chicken nuggets. 1,200 calories right there. Yeah, I eat an insane amount of calories because I do work out, so I need to eat a lot. For someone new, how many indicators is good enough, and which ones do you recommend together? I know it's good to have more than one to complement each other, but it can get overwhelming if there are too many. Absolutely true. Just look at my charts here. I mean, yes, this looks so overcomplicated, but I have no indicators. This is just technical analysis. These are lines I drew, these are levels I drew, these are boxes I drew. The most important things to look at is price action and volume analysis, right? Then probably the most other important indicator if you want to use is VWAP, because institutions use that. And then maybe the EMA. The personal best EMAs, in my opinion, for day trading is 9 EMA and 21 EMA. But I personally always just use price action and volume analysis. Hopefully that answers your question. I know there's a lot of strategies where it like ties two indicators together. I guess I'll try bringing out content about that later on. But from my experience, it's just always been price action and volume analysis. I used to have a strategy using Bollinger Bands, and that would like help plot out very powerful support and resistance levels. If you actually guys see, there was an analyst here before named Neil Cetrick. He's actually a student of mine that actually has become very profitable in the stock market, right? And he learned off of me, and he learned off of that strategy, and it's actually a very good strategy. So I'll go over it with you guys sometime. But obviously, price action and volume analysis beats that strategy. It beats all strategies. If you can learn how to accurately trade to price action and volume analysis, that's just the best way to trade, to simply put it. I realize you're not taking a loss yet so far, but do you alert when you decide to take a loss? I kind of closed my 430 put early in the trade at 0.86 before it reversed into profit. Let's see, which one are you talking about? I think you're talking about this put I entered in the morning, right? Where I entered at 1. Sorry, I'm so sorry, guys. My girls just text me at the same time. I'm unfortunately not giving her too much attention tonight because I've been so busy, so I just feel bad. Because I also miss her. We unfortunately don't go to the same college, so we only get to meet each other on the weekends. So just give me one moment. Just text her back. Okay, so back to your question. So back to my trade. We entered in this put at 1. I forgot what time I entered in. Let's actually no, I don't want to go to the server. That's promoting the server. Actually, wait, hold on. I could go to my alert server. Okay, so this is where I literally post my alerts from. So I found a loophole. Okay, let's go. Let's see. When did I post this alert? Okay, so this is around 9:52. So this basically what this 22 after market open. So we did have very wait, hold on. Which put are you? This one went into profits right away. So which put are you talking about? Who asked that question? I'm so sorry. Where are you? No, the question went away. Where's the question? Oh no. Oh, here it is. Basically, okay. There's two ways you can obviously set a stop loss or get out of a trade, since I don't know exactly which trade you're talking about. But you can either wait for confirmation of the opposite trend that you're trading towards. So let's say you get into puts, right? And you find confirmation of an upward trend instead of a downward trend, then you would get out, right? And that's personally what I do. You can also just set a percentage stop loss, and that's what I would always recommend, especially since you guys are small. Most of you guys have small accounts, and there's nothing wrong in that at all whatsoever. That's smart, you know. You guys are starting off small, gaining confidence, and then putting later on more money. But so just if you have what I would always recommend is sticking to percentage stop losses. If you do find yourself getting stopped out a lot, I will try to go over a live one day on how to set stop losses according to the actual stock, right? And like confirmation on whether you should exit or stay in the position. So that's something that's more in detail I could go into. But yeah. Yeah, it's crazy. In New York, I see prices I think like $3 or more. It's crazy. It's crazy how gas is increasing. Yeah, I get that. I just want to stay in that trade instead of letting emotions get the better of me. Okay, even if you get stopped out, think of it like this. You're at least capping your losses. I don't have a magic ball, you know? I'm just entering a trade that has a high probability. Emphasis on probability. That means it could work against me. So if I just let just the option go and not have a stop loss, right? I could have huge losses, right? Instead of losing like, let's say we entered at 1 and it went to 86 and you got stopped out at 86, that's a $14 loss versus just holding on to it and being like, oh, it might go, the contract price might go back up. You might go from a $14 loss to like a $50 loss. It's happened to me in the beginning a lot. It's happened to a lot of members. I mean, how many times has that guys happened to you? Like, it's common. So just get out of the habit of thinking, oh, how do I not miss out on profits? Because that's not the main point. The main point is you take profits when you get them and you cap your losses. That's the most important thing you should focus on. Once you're confident in either an analyst's ability, right? You should not be confident in my ability, right? You guys should, like, I would say you should be confident in my ability after trading with me for maybe 3 months, because that's a smart thing. Because it's just you should have a little bit more control to how much you trust something. You should not right away trust your ability to trade. You should be able to see whether your trading abilities are good enough or not. But yeah. Okay. What's my major? Yeah, actually I answered this question. Not gonna lie, I haven't been inside a grocery store in years. Yeah, I have not been to. There's Instacart and stuff like that, but I'm in college, so I don't really buy groceries, unfortunately. next question. Next question is, are you becoming a doctor for your parents, or would you rather trade? I'm big. Okay. Even though, okay, so the profits I have from my trading, right? I have not withdrawn from my account more than 5 times so far over the past 9 years and 8 years. And the reason is because all my trading funds, whether it be profits or the actual investing funds itself, they're all going towards my dream project, which is basically buying land starting off in Pennsylvania and Virginia and opening up dog and basically animal shelters, and that requires a lot of money. So that's why I've been saving as much as I can, and I've not been, withdrawing money. So that's why I obviously want to become a doctor, because it does bring in stable income. And even when I do reach the point where I don't need to give my funds into as much funds into the dream project, the market's not always going to be stable. Your trading is not going to always be stable. Regardless of how good you are, you're going to have bad months and you're going to have bad years. That's why having a job behind trading will always be a better option. You should never trade just straight off. Even if you trade full time, you have time after market close, right? You have time on the weekends. You can find jobs to do. You need to find income streams other than trading. Regardless of how good you are, you could be a millionaire, I don't care. It's the smartest thing to do, because one day, God forbid, something could just work so against your way when it comes to trading, and that stability you had from trading will be absolutely gone. So just always keep that in mind. Oh man, that noodle looked good. That looks so good. I deserve the world? No. The only thing I deserve is what God plans for me, and God willing, I deserve the girl I'm with right now. There's only 2 things. That's the only one thing I hope to deserve. Actually, those are 2 things I hope to deserve. Why are you always posting depressed? Yeah, this guy's always posting cat gifs. That's true. Again, we'll talk about charging for alerts privately. I'm not a pure soul. I'm just a soul. You're down 18K. Wow. Well, even though you're down that much, I hope you learn from it. And I hope that you can learn from my lessons as well, from what I teach and all the mentality. In the end, I could teach you guys all of this TA. I could teach you all of these indicators, all of this, just how to trade off indicators, blah blah blah. Supply and demand zones. It literally means absolute poop, and I mean poop. Sorry, I don't curse, so I know that sounds childish. I know I'm 20, but I don't curse. So it's actual poop if you do not have control over yourself, and if you let your emotions take over, and if you don't stick to setups and plans. If you do not have that control, it doesn't matter if you have so much extent over it. So, yeah. Sorry, you just heard like the most creepiest sound in my room. No idea what that was. Can you go back over your trades today and what you plotted throughout the day? Okay. Hold on, let me see how much time I got till my food comes. Also, let me check when my girl texted me. Sorry. Man, what the heck? It's saying it's arriving by 2 a.m. It's only 1:40 a.m. That's sad. I know I've been very distracted the past 30 minutes or so, but I do hope the past hour and a half has been good. Educational wise. Actually, if you guys actually don't mind, I kind of do want to talk to my girl. It's kind of been a long day anyway, and we have been running on for a very long time. So if you guys actually don't mind, whatever questions you have, if you can remember for next live, that would be much appreciated. Obviously, if you guys want to continue live, I can do that for a little bit. But, okay, yeah, thanks for you guys understanding. I just feel like it's the right thing to do is just, call her and just take care. So I'm so sorry to cut this short. But It was a pleasure talking to you guys. Let me know if any questions, but sorry to be abrupt, but I'll see you guys tomorrow. Good night.